biggest motivator in life is money. The best way to grow your money is to set it and leave it, which means the idea is you put money in and you continuously put money in and you forget it. Don't do it for the money. Do what you love doing because money comes. I'm going to treat my kids like we have no money.
Yeah.
Even though we do, because I feel with not having money comes a big level of maturity. And yes, I will export my children.
Hey guys, welcome back to Financially Incorrect. It's been a couple of weeks since we recorded. I have been protesting, been on the streets, been giving money for our Kenyan audience understand exactly what we're talking about. For our, I guess, more international audience, yeah, we have been, if you haven't seen it on Twitter, you must have seen, our hashtag on Twitter around the finance bill. Anyway, so it's been a while, so we're back now. Feel like it's time to get back to our financial conversations. Remember, this podcast is proudly sponsored by FX Pesa. If you'd like to learn about trading, they have physical classes at any of the locations in Thika, Eldoret, Kitengela, Nakuru, and Kampala. And we have our links in the description box where if you click on those, you can go and take online classes. If you'd like to open a demo or trading account, again, all of those things can be done in the description box via the links there. And yeah, again, huge thanks to FX Pesa for being able to do this. They're our title sponsor. Today, we have Radhika, who is on here with me. She is a CEO and co-founder of Ndovu, which is an investment, it's described as an investment platform. That's sufficient.
That's sufficient.
Yeah.
Hi everyone. Pleasure to be here.
Yeah.
I would describe Ndovu as your wealth partner that helps you create wealth for the future. So you take your hard-earned money, you put it to work so you don't have to work for the rest of your life.
Is that like because I know you're 2 years in, is that your elevator pitch? How they tell startups? What are you going to say in like 3 seconds?
Yeah, so I always say, because it's so easy to learn, is that Ndovu is the betterment for Africa. So Betterment is a big company in the States and every investor is from the States. So it's like 3 words, Betterment for Africa. They're like, oh, I get what you do. So that's my elevator pitch.
Right. Okay. So before we get into, I guess, this full conversation around Ndovu, around your story and your thoughts around, I guess, everything finance, I would be remiss if I didn't ask, what did you think about the whole protests, I guess the last 3 weeks that we've had? Did you protest in any way? And by that I mean, did you send money or were you in the streets? Yeah, so
I mean, I love it. You're just going straight into the financial political situation. So actually, I had traveled for work. So I was actually out of the country especially last week when things were a little bit more heated. Yeah. But my team, Ndovu, was sponsored to go out and, be able to vocalize or participate in what they stand in, right? So what they stand for, sorry. And so in a way, we contributed to the protest, supporting our Gen Zs who work for us to be able to vocalize how they feel about the finance bill. Yeah. And we're living in very interesting times, I would say. Yeah. Yeah.
I when the protest started, I know the episode that has gone out before this one was with Kibunja, who was on the first day of the protest, and I was telling him that I sent money on that day, and I was talking to my sister-in-law who was like, we're going to protest. And at that time, I really didn't think, much would happen. I didn't think that. I thought it would be the usual, usual government thing of, people protested and then, the bill will go through. So when it was actually rejected, I was very pleasantly surprised in one way, and also in another way I was like, actually, these things do matter. Because when I was on the streets, I remember Kibunja telling me about the first feeling he got was one of pride, was one of just patriotism, and I felt that for myself, and it was really, really incredible. And I guess I hope things do change. I don't know what the new finance bill will look like, but as of today, the day we're recording this, there's a big conversation around the salary increments for legislators. And I don't know. What are your thoughts?
So my thoughts are quite varied on this topic. If we're talking specifically about the increase of salaries for the legislators, is 14,000 shillings really going to make a dent to there? So just for those of you listening in, they already earn somewhere around 739,000 shillings on average. I might get that wrong, but it's that ballpark. and they're looking to increase it by another 14,000 shillings, where all the other MPs are like, no, don't do it. Yeah, because it's not meaningful.
Yeah.
And the question really is that it's not their base salary that they're getting. It's how is the budget being allocated to other uses of funds. Like certain departments are getting money that just doesn't make sense from somebody sitting in my seat. And, I'd love to get a bit more deeper into it. But the question is, the 14,000 shilling is not going to make an impact. I remember I also saw an article a couple of years ago where it was like at the front of Business Daily saying police officers are getting 2,000 shillings pay rise.
Right.
And it doesn't make a difference, right? Like, you're not making a meaningful impact. The question is that let's allocate the budget more effectively. So if you are giving MPs a rise, make it meaningful, but then hold them accountable for certain standards they must meet, KPIs they need to drive. Run the government as an actual business.
Yeah.
And it probably is. I'm not so close to the finance bill and everything, but the idea is that it's easy for an MP to say, hey, listen, I don't want the 14,000 increase, because that's not going to make an impact to anyone.
Yeah.
If you and if somebody gave us a 14,000 shilling increase in our salaries, it'd be like, it's a bit of an insult, really. I don't want it.
Yeah.
So it's just it's more understanding, how are they allocating the budget? Is it going to the right uses? Is it contributing and impacting people on the ground?
Yeah.
And we understand, there's expenses. Everyone needs to work and function a certain way, but it just needs to be allocated appropriately.
Yeah. I have a two-pronged question for you as a CEO, right? Mm-hmm. I mean, if you look at the Kenyan government, or any government for that matter, and you have the president who ideally would be the CEO, right?
Yeah.
If you're paying in the same way that you pay your employees, right? Mm-hmm. I mean, I assume that you would want to pay your employees based on the value that they bring to the company, and the things that they're able to do for your company. Mm-hmm. And then if your employees that do really well, you then get them bonuses, right? At the end of the year. And I'm wondering how come governments don't sort of adopt that same structure in the remuneration of legislators, of saying, ideally, your compensation should be based on the value that you bring to the people that you represent.
Yeah.
So if you then, you're able to launch 1,000,001 project, and your constituent or whatever the case is doing really well, then okay, fine, take a bonus of whatever the amount is. But ideally, the salary or remuneration that you're paid should be based on the service delivery that you have. But I think at the moment, being a member of parliament or being a legislator in our country specifically is almost like a business plan in and of itself.
So I couldn't agree more. I actually think that I think governments would thrive if we had value added remunerations, right? And let's be honest, I don't think anywhere in the world actually does that. No, they don't look at the government as a entity that's here to deliver results. It's just an entity to govern the body, and there's set standards. If you're here, you get this much. But I think we would make more meaningful impact, because very clearly in my team, if you're performing and I know what your salary is, I up it. If I know you're delivering, I don't want to lose you. I know I can get more out of you. And the biggest motivator in life is money, because money buys happiness in some shape or form. And it would be incredible. Imagine if all our MPs were on KPI-driven metrics.
To earn that, even if that's 700,000 shillings.
We would see significant progress. Significant progress. Things like this, like creating projects means creating jobs. Creating jobs and creating this, let's say, an infrastructure project means that for businesses, they're able to logistically move things at a cheaper cost and a faster time, which means they can deliver more products. So overall, if our MPs were aligned to saying, what are your 5 KPIs for this year? And you'll get a bonus at the end of the year, depending on it. And it would be great.
It would be interesting to see, like a social experiment.
That would be actually incredible.
Anyway, my last question on this is, as a, I guess, owner, founder, CEO of a company, and I'm going to ask this in a African context, right? Why is it so difficult for corporates to stand up in responding to things that the government does, right? Whether you're pro or against, right? And I'm asking this against possibly like Elon Musk, for example, right? I mean, he's a billionaire times whatever, and he would say, whatever. Like if the government did something and he wasn't in agreement, it'd be like, You guys, nah. Yeah, so why is it so difficult for corporates or entities like yours to stand up for one side or the other?
No. So I would we all have views. So it's very difficult. So in an African, and even not even an African, but I think globally, if you're a small fish in the pond, who doesn't have so much bargaining power, whereas Elon Musk, he's used to be the richest man.
Yeah.
And he's got so much power that he has the luxury of saying what he wants.
Yeah.
Whereas a small business like Ndovu, we do have our views. I think the finance bill impacts us negatively. It impacts my employees negatively. And those are just facts. But actually, I wouldn't take a out there vocal position on it, because actually I have a responsibility to my investors to act in a way that doesn't detriment the business. Mm-hmm. And living in African countries, we're in volatile states, people can, get abducted, and,
mm-hmm.
Your businesses can be shut down based on nothing. Mm-hmm. And therefore businesses are cautious, because at the end of the day, I have 22 people I employ. I help them we as a team help each other put food on the table. Mm-hmm. And if I went out there and was super vocal and said something that rubs someone up the wrong way who has more power, that's why it's difficult.
Yeah.
And I think, a lot of organizations, even big corporates, they have a certain sound bites where they're not allowed to deviate. They're mm-hmm. not allowed to have a view, mm-hmm. because it can have an impact on your business and revenue. And, most importantly, you have people relying on you. So if you shut down or something happens, what happens to them? And so it's more like in our Ndovu house, it's we're a family and we sort of look out for each other. So me going off on a rant when I don't know if what I say is going to have an impact, mm-hmm. I wouldn't do it. Yeah. Unless I was 100% certain
that nothing was going to happen.
Nothing was going to happen, or actually what I say is going to make a huge difference. Mm-hmm. I would. Yeah. But in this situation, I'm still undecided. Yeah. If you know what I mean.
Yeah. Okay. All right. All right. Before we get into, I guess, even how you built Ndovu and how you got there, let's start at the very, very beginning, right? What kind of household did you grow up in? Yeah. How much money were you exposed to? I know that you studied here and then studied in the UK, so maybe give us a bit of context about that.
Yeah, sure thing. So, so when I was growing up, I actually grew up quite, I wouldn't say we were privileged, but mm-hmm. we weren't also poor. Mm-hmm. So it wasn't that my father and mother were worried about how are they going to put food on the table. Mm-hmm. But if I wanted that new shiny thing that somebody had at school, I wasn't getting it. Yeah. My Indian parents are like true Kenyans. We are like black. Can I say black? I hope it's okay. We're like black. We're raised like black children. Like, you want to get that? What money do you have in your bank account? Yeah. It was that sort of upbringing. Don't get me wrong. We didn't have to worry about food. We didn't have to worry about bills. We had a house, very mm-hmm. modest, and we were sent to private school, but we weren't those families who'd had ample money. Mm-hmm. It was the parents who worked really hard by mm-hmm. cutting corners to save money so they can send their kids to a better school. Yeah. And that was the family that we were. And so growing up, a lot of the things that we wanted and aspired to, we didn't have. Mm-hmm. And I was always told, no, we don't have money for that, which I honestly think is the best way to raise children. Mm-hmm. And I have 2 children. And growing up, touch wood, we are now very fortunate. We've worked really hard. We've built through financial knowledge and literacy how to create more money without actually having to work really hard. Mm-hmm. But I'm going to still tell my son when he says, Mama, I want an iPad. I'm saying, well, so how much money do you have in your bank account? Yeah. You don't have money? Right, let's do chores. Yeah. What can you do? Are you going to go clean up the streets, the community garden? Fine, let's do a group exercise where everyone gets 3,000 shillings as a group. Like, really teach them the value of money. So very normal, average family. I'm very grateful because I think it taught me a lot. It's made me a much stronger human. Yeah. To be able to deal with the daily stresses. If I was privileged, I don't think I could be doing what I'm doing today because it comes with that resilience that I wouldn't have built when growing up. Yeah. So I studied here until O-levels. I moved a bit back and forth, and then I went to the UK and I studied there. So I did my A-levels in the UK. And being true typical Kenyan, obviously, we would get a bit of pocket money, but obviously it's not enough.
Yeah.
So I went and I got my first job as a sales assistant at the Timberland store. I'm sure you know about it. Timberland boots.
I know Timberland boots. I don't know the Timberland. Is it? I've forgotten the brand that they're under. But
so it's just under Timberland.
Right.
And the boots. And I went and got my first job. If I remember correctly, I was paying like £5.20 an hour. It was a weekend job.
Yeah.
But it just meant I had extra cash. And it helped me build my confidence because I was only 16. So it's like speaking to random people, trying to sell a product, sort of like building my skill set that I needed to become an entrepreneur.
Yeah.
And then so went to university, finished my O-levels, went to university in Nottingham. So I didn't want to stay in London because we lived in London. And I studied maths. So actually first I was meant to do dentistry because I'm Kenyan. Every Kenyan should be a medic, a nurse.
The professions, right?
Professions, right? Like that's what your parents tell you need to do.
Yeah.
And I got in to university to do dentistry, and then I did the reverse and went to do my work experience. And I did one day of like looking at someone's mouth, and I was like, you know what, this is not for me.
Yeah.
So then I quickly changed to something that I wanted to do, which was I just did maths. I was good at it. And then I did that for 3 years and then graduated. And then I joined a graduate program at Deloitte. And then after that, about 4.5 years, I realized instead of being behind spreadsheets where I was working with, so the role there was very much, you are analyzing data in order to recommend the best investment strategy for pension funds.
Okay.
So, pension funds, they collect all this money and they invest it so they can pay out the pensioner when he retires. And you have to do all these maths, and it was a lot of asset liability modeling, a bit boring. And in meetings, I realized actually I'm better suited with people. So being and taking really complex ideas and communicating them very simply. And then naturally the next progression was to be a relationship director at BlackRock.
Right.
So then I moved there and I did about 4.5, 5 years there as well. And then I moved back to Kenya in 2019.
Okay.
Yeah.
I want to take you back a little just to give context, right? Because you have said that, you did not grow up in privilege as far as you're concerned. Yeah. And I want to qualify that a little. So for the people who may be watching to be like, okay, yeah, talking about not growing up in privilege, but then you're in a private school and living in London and studying in the UK. So, I mean, what for you is a understanding or context of privilege when you said that in your opinion, you didn't grow up in privilege vis-a-vis what you saw?
Yeah, no, and I think that's what it is, right? Money is all relative.
Yeah.
And I think no one really teaches that growing up. And I think it's a very important skill set to learn at a very young age. Even when you think about investing, what does investment mean for you and what does privilege mean to you? Now, if you compare me to somebody who grew up in Kibera and, the parents were worried about bringing food home, obviously I'm privileged.
Yeah.
But I was just comparing myself at that point to people who are families who had done way better than my parents.
Yeah.
And in that mindset, I was like, I was not privileged because if I'd asked I want to go on holiday, they'd say, no, we don't have the money.
Yeah.
But did I have clothing? Did I have shoes? Did I have basic education? Yes.
Yeah.
So in a way, I am privileged. And another definition of privilege, which I learned, was going to the UK. And you realize that actually all these rich kids were getting into graduate roles in the room with the right people because their parents had built those networks. And I am not against that, but what I'm saying is I didn't come from those types of privilege where somebody just gave me a job at BlackRock. No, I didn't just get my Deloitte internship. I had to work really hard for it. I had to have the grades. I had to, speak to the right people and build my own network.
Yeah.
So from that point of view, I don't come from privilege.
Yeah.
And, you see it here too. Like if you're well connected to, your dad's the CEO of a big company.
Yeah.
The kids get to do an internship wherever they like.
Yeah.
And so that type of privilege I didn't have.
Yeah.
But yes, I had food on the table. I didn't worry about anything.
Yeah.
I couldn't buy that Barbie doll I wanted to buy.
Yeah, yeah.
But that's how I define privilege. There were people with more than we did. And you see it a lot more when you grow up.
So, so at this point in time when you're, I guess, working at Deloitte, do you have, and working, I guess, within an investment context one way or another, did you set yourself up for any financial goals where you're like, I need to make money. I'm seeing all these things people are doing for their retirement or whatever the case is.
Yeah.
And this is going to drive me to be able to make a lot of money.
Yeah, no, agreed. So, so I was in pensions. So first of all, I go into this role not knowing what to expect.
Yeah.
Because it's so weird. Those job descriptions when you're applying for them, they're just words. They mean nothing to you. You've never been in an office space. You don't know the impact that you're going to have. And honestly, my advice to anybody who wants to get into an industry is go and speak to someone who is doing that job and ask them, what do you do every hour of the day?
Yeah.
Walk me through your day. Because in your mind, you're like, oh, I'm going to be an investment consultant. Deloitte's going to be like amazing.
Yeah.
I'm going to do all these exciting things. Actually, no, it's crunching numbers.
Yeah.
Which actually in the long term have a larger exciting impact.
Yeah.
When you're doing that one task, it doesn't feel so exciting. So I would recommend whoever's looking to figure out how to grow money, whatever, go speak to somebody who's doing it already. Yeah. And honestly, there's, in this day and age where we're so socially connected, just jump onto LinkedIn and message someone. Humans want to help you.
Yeah.
Say, hey, I'm super interested. I know we don't know each other, but please could we have a coffee because I want to learn more about your space. So going back to your question though, so I got into doing investment consulting for institutions and pension funds. So a bit of context, pension funds, every month, if you're working somewhere, you're paying a part of your salary into a pension. And the promise that the pension or the company says is that you're paying me all this money so that when you retire, which is normally at the age of 65, every single month you will get a small lump sum so that you don't have to continue working. You've got a bit of money to help you with your lifestyle.
Yeah.
And what I realized very quickly going into the pension scheme was, oh my God, this is free money. So I'm not doing anything. So the way it works is that if I'm earning $1,000 a month, I'm putting away 10%, which is 100. The company will match it. I don't think it works necessarily like that in Kenya, but in the UK, that's like one of the best way, and it's free money. So I maxed out my percentage. So I said I want 14% to go in every single month, and the company matched 14%. And then, of course, working with pension funds and how to invest money, I've seen every strategy you can think of under the sun. Especially at BlackRock, I work with the most brilliant people, brilliant minds, different countries, diversification, everything you can think of. And what I came to a conclusion was the best way to grow your money is to set it and leave it, which means I know active investing is very exciting. Like, let me go out there and buy Apple. Let me go out there and buy Tesla. Oh, what about Nvidia? It's really exciting. But if you want to make wealth for the long term, and there's a space for active investing in your portfolio, the idea is you put money in and you continuously put money in, you forget it. Because if you look at the last 100 years, if I was to compare, if I had done active investing, which is like picking and choosing which companies I should invest in, buying and selling, versus simply putting $10,000 100 years ago, my $10,000 in a strategy where you're buying the entire index. So for example, in the US, the entire index is the S&P 500. So it holds all the sectors like consumer goods, financials, healthcare, technology, and the likes.
Right.
That boring fund, which has a basket of every single company that's listed, has outperformed me specifically going there and being like, let me buy this, let me sell this, let me do this. And the reason is because when you do active buying, there'll always be losers, right? So one day I might buy, because I don't have the skill set, the knowledge, or the time, and I bought, let's say, Nvidia because everyone's buying Nvidia. Yeah. And then something happens, I don't have the time, so you end up having losers. Right. But if you just buy the simple index and leave it, that the fact that you have all these other companies, let's say Nvidia did do poorly, all the other companies are doing well. So it kind of evens out. So you're not seeing like stellar returns, but you're seeing healthy returns. Yeah. And I honestly
in the long run,
for your long-term portfolio, that is the way to go.
Okay. Yeah. And so how much were you being paid at Deloitte at the time?
Yeah, so I joined the graduate program, which is an incredible program to join because they really teach you how to behave and analyze data, etc. So it was a really great program. So I started off on £35,000. And it's because it was an investment consultant role. Like if you were in auditing, you would start out at £27,000. And this we're saying is about 18 years ago. Okay. Yeah. So now I'm sure it's gone up. Yeah. But yeah, that's how much we started. Yeah. And then every promotion, you would have a jump of about 6 to 8K. Okay. In bands. And then depending on how you're performing, what role you're in, so you can grow every year. Okay. Depending on promotion.
And so at this initial job, right, what are you doing with your money at that point?
Honestly, I was spending it.
Yeah.
Yeah, because
I mean, all of this information that you've talked about right now about the investment and all of that.
I was spending it.
Okay.
I tell you why. It's because I came from a privilege whereby, like, you know, what I earned, London's expensive, right? So my father's here, London's expensive. I'm now independent. I was enjoying life. I traveled. So I did a lot of backpacking. I went to South America. I actually took a sabbatical off Deloitte to go to South America when I got my BlackRock job offer. So it kind of worked out perfectly. But yeah, the idea was that, I don't know, I had this weird feeling that life is cruel. When you have the energy and the time, you don't have the money in your 20s and your 30s.
Right.
And then when you have no energy, so you're getting older in age, but you have all the money and you have a lot of time. So it was almost like a catch-22. I always knew I wanted to move back to Kenya. So in my mind, I was like, I will invest and save, but I'm also going to spend my money.
Okay.
But now if you ask me, that was my 20-something-year-old self.
Yeah.
And the problem with me, because I had worked in finance and investments, I couldn't just invest on the stock market. I actually had to get like all this legal clearance before I could do it.
Right.
So I was holding passive funds through Deloitte, and I started that through my pension very early on. And then when I moved to BlackRock, which was 5 years in, I started putting more of my salary. So I'd say the first 4 years, I really enjoyed life.
Yeah.
But actually now when I look back at the growth I've had from the age of 25 to now, I wish I had that information earlier to say, hey, listen, have fun, but with moderation. Yeah. Because the wealth that I would have accumulated now would have been significantly more and can help me a lot more now when I have kids and things like that. Yeah. So my general advice to everybody is life in moderation. Yeah. At that age, yeah.
Okay. So you finish, what informs your decision to then move to BlackRock? And maybe to give context to, I guess, a Kenyan audience, what working for BlackRock means.
Yeah. So obviously, like, BlackRock is the world's largest asset manager. It comes with its own brand. It's like working for Tesla in the finance world, right? Just so for those who don't know what BlackRock is. So what informed my decision to move was I felt, so a couple of things, right? I have this really, now that I'm hiring people, I have this very different view on how you jump your careers. So what I find really difficult is that with the new generation, they'll spend 1 year with you and then they've moved on to a new role, and they'll do another year there and they move on to a new role. Meaning you are doing a lot of nothing, because the first 3 months you're getting up to speed on learning what the role does, what does it entail. You don't really get to the depth of it, because by the time you're getting ingrained into it, you've moved on to a new role or a new company. And so if you were to compare somebody in my age who's probably done 4 to 5 years at each company versus somebody slightly younger who's now jumping roles, you know a lot about nothing in a nice way, because you've done lots of different roles, but you don't have any areas of expertise. So I can't pay you, if you were to come to me, the same amount of salary that somebody who's done this role and knows the ins and outs of this one particular role, the same, because actually you're too broad. You've done too much of a broad experience. And I see that quite a lot when we see CVs come through. And immediately I actually put them away, because I think I'm hiring specifically for a data analytical role. But if I get a CV who's done data analytics for a year versus someone who's done it for 5 years, I know their expertise is much stronger. So even when we were my time, that wasn't a trend that you keep jumping role to role. The idea was the average time you do is 3 to 3.5 years, and then you move. But luckily for me, I was getting promoted, so I was getting different exposure. I actually moved to do other types of consulting, so I was able to learn different things, and so it wasn't so mundane, it was different. And so the decision to move to BlackRock was, after doing a lot of asset liability modeling, being behind this Excel spreadsheets, etc., I was like, what do I really enjoy? And I enjoyed engaging with people. And that's when I said, right, it's the right time to move into a more of a sales role. And then I looked at, okay, where else can what do I love? What do I do? And I still really love the fact of taking money, investing it and growing it, and understanding, how can you do that? How can you get to your financial goals quicker? How do you help people define their financial goals? So then I moved over to BlackRock, and that's where I was still working with institutional clients. And I was telling you earlier, I got a book of investment platforms. Right. And I think this is like just generally because we're talking about how can we be better at and get to where we do. During this time actually at BlackRock, they gave me this a big book of an investment platform, which now Ndovu is an investment platform. And I remember at that time, it was not something that you wanted to do because it was very operational heavy. You needed to understand, like, how does a platform work from here to here? And there was a lot more operation than sales and being in the meats of the exciting pitching and selling. But actually, in hindsight, I did that for 3 years. I kind of had a team built around me after that. They were doing a lot of it, but I still managed it. But weirdly enough, when I moved back to Kenya, I had no idea I would start Ndovu, which is an investment platform. But guess what? I had all the skill sets to do it. But I didn't see it at the time. And this is another thing. If my younger cousins would come and say, hey, what would you advise? I'd say do everything. That even the things that you don't want to do, because there's a hidden message, it will come handy somewhere. So that's how I decided. And I think when you're working for a company for a while, it's very important to be like, okay, what are my strengths and what are my weaknesses? Do I want to work on these weaknesses? Because you have to be an all-rounder. Yeah. Life is tough. You have to do everything. Yeah. But what are the key things I want to focus on? And then really pull it backwards and say, okay, these are the things, for example, I like doing sales. I wanted to stay in finance. I want a big name on my CV. That's why I applied to BlackRock. So being quite deliberate in what are you good at? What do you know you'll be really happy doing? Because guys, we spend, 60 hours a week at work. Yeah. You have to do what you love. Yeah. Like doing 30 years of that, like you have to be so passionate. You want to be happy working, so you don't call it work. Yeah. And I wish like these were some sort of advice I got when I was younger, saying that don't do it for the money. Do what you love doing because money comes. Right? And I think that's what we don't miss. And I feel like the generation with my younger cousins, it's like instant gratification. I want the money now. I want the paid now. And like, you don't know anything. Yeah. You want a $60,000 salary for doing what? How can you generate income? But I will say the younger generation are a lot more better equipped than we were. They have the 5 a.m. club. We didn't have the 5 a.m. club. I was snoring away at 5 a.m. Yeah. When I was growing up. But like these teenagers now, it's like, 5 a.m. club. Oh, wow. You can sleep from 10 to 5 a.m. and then be ahead of the world. Information's readily available. People are, you can connect to people. If I want to get in touch with the CEO of a company, I just go on LinkedIn. Like the tools are there. Yeah. So they will be better. They're better equipped. But the problem with, I feel, not the problem, or I see like the culture with that generation is they want it now. Yeah. And actually nothing was built in a day. Rome was not built in a day. Life is not built in a day. Life lessons are not learned in a day.
But a lot of those things are much easier to draw back and make points retrospectively, Yeah. When you were in the roles, when you were working at BlackRock, was that your thought process, if you had to be, I guess, absolutely honest with what you're going through? Was it like, this is going to work out in the end and this feels really good and I'm building towards X and X?
So it's weird because the one thing, no is the answer, right? I think now it's this way because I'm in a different seat. I wear a different hat. Yeah. I wear a CEO hat where I have to build a business from scratch. Yeah. And I'm now talking from like, what would I need my employees to be doing? Yeah. So yes, I agree. That was not my thought process, but my thought process at that time was, I need to be better than yesterday, and I need to be doing the things that are going to get me closer to that. Yeah. And I don't know where life is going to take me. Yeah. And I honestly didn't think I'd be running a company here when I moved back. Yeah. I didn't think that. So maybe what I would say is like, make sure you're always learning. Yeah. Because that way you're not bored. Explore new things, try new things, speak to the right people, be inspired by others, read lots of books about people's success. Because you'll start to see patterns then you can exhibit in that. Yeah. But yeah, you're absolutely right. I think hindsight is a real thing.
Okay. And a question, right? Because you talked about where you are right now in life, right? After you moved back to Kenya. Yeah. What are the things that, if you were to look like at critical things that you did in your work, whether it was at Deloitte or at BlackRock, before you come back, what are the things that you did that allowed you to have enough capital to move back to Kenya, to even think about moving back to Kenya, or even before you started Ndovu?
Yeah, so I think the rule of thumb I was taught was save 30% of your income. And then above that, you need to have life experiences as well. Yeah. So I think there's a two approach there. And so I made sure that every month I saved 30%. And as I was growing and speaking and learning about finances, I was able to buy a couple of properties whilst I was in the UK, and that generated passive income. And that was another opportunity. Obviously, I was earning a salary. I could get a mortgage from the bank. It's actually not that easy in Kenya to get on the property ladder because mortgages are so high.
Yeah.
And over there, we're going through a negative interest rate. So banks were charging you peanuts for it. Was free money. It was silly not to take a loan at that time. But in Kenya, like you have to pay 21% on the loan.
Yeah.
There has to be a reason why you're taking out a loan. It can't just be, so making sure that, before moving back to Kenya, I was able to like save enough. If anything happened, I can rely on my savings. And also here it was different because I was moving back home to family. So they already had a base. It was not like relocating to a new location.
Right.
But the biggest worry for me at that time was, what am I going to do? I can't sit at home. And what does my career look like now?
Why did you want to move back?
So actually my husband and I got married and his family's here and he wanted to come back and support his dad in business.
Okay.
So the question was, what am I going to do? There's no BlackRock here, but there's other asset managers. And it was a very interesting time.
Was that a difficult decision to make as a partner where, I mean, you, I guess, married, living in the UK and now...
my best life.
Exactly, earning, thousands of pounds. And then he wants to move back, support his father in business, but you're now, moving as well.
Yeah.
And you don't know what to do. And I guess my question is, financially speaking, like if you remove the philosophical elements of it, how difficult was that decision to make?
It was difficult, but I had an ulterior motive. I wanted to have kids. And if I looked at my crazy lifestyle in the UK, waking up in the morning, going to the gym, coming back, we didn't have help here. And I know like not everyone has help in Kenya, but it's affordable. And getting a nanny or a caretaker at home is not affordable in the UK. You need a lot of money. And also, weirdly enough, I always wanted to set up my business. And I knew that if I didn't move to Kenya, I wouldn't do it in the UK because my salary was too good. I wouldn't take that risk. I wouldn't take that plunge. And then you have to remember, like even from a corporate, if they're making... business decisions where they're getting rid of people, no matter how brilliant you are, if they decide that this customer or product segment isn't doing well, you're still a number. So it was more of that, like, okay, where do I see myself in 5 years' time? Do I have enough capital here to sort of move back, be comfortable to explore what I want to do? And I have a roof on my head, I'm not worried. Then it worked out. But they were, from an emotional side, a lot of fear. Like, what am I going to do? Who are going to be my friends? I have such an incredible life in the UK. There's all these emotions. And the only thing I could say is that, like, you have to say, it'll be fine. These are the things that we're going to do. I'm financially okay. I've set up myself. Great. It's going to be fine.
How good is your salary was too good? What is too good?
So I was earning over £100,000 a year. So, and at the
time when you were,
so I just turned 30. So £100,000, take out tax. So it's probably taking home 70K. Do 70K divide by 12.
Even if I just do it on the like an annual
basis.
Because at the time pound was like what, 150 or
150,
thereabout, at 70,000. How
much is that?
You're like on an MP salary. It's about 875 a month.
A month,
And that's one income, and you were married, and so living in a
dual income. But even then, it's not enough. I'll be honest. I said no. We can live a comfortable life. But imagine earning that here versus there. It's different because things are
it's a really different context. Okay.
And that was at the age of 30. So now, just fast forward, career progression, hungry, 35. Probably, I would have done a different move as well. I would have moved to another asset manager. So I also find, like, you have to be very deliberate in the decisions you make when you're moving your careers. And you have to ask, like, do I want a 20% pay rise? If so, does that mean I need to move shop? But not within a year and a half. Stay somewhere for 2 years, 2.5 years, then move. And, like, the idea is that you need to upskill yourself to start figuring out, like, how else can I get involved in things? And these are things I did, actually. So even talking about hindsight, the things I did. I actually got involved. I was a yes woman. Yes, I'll do it. Give it to me. I'll try it. Yeah, why not? I've got nothing to lose kind of thing.
Okay. So you come back,
Yeah.
you realize there's a gap in the financial market and financial literacy. And so you said you're going to start Ndovu.
Yeah.
So what's that initial process like, and how much capital does it require at least to kick off?
Oh, God. So, wow. So keeping in mind, I've moved back from London. I have no job. So I decided to just go to a co-working space. I was like, right, I need to figure out, I was so done having coffees. I think I had probably 90 coffees in a month.
Yeah.
And I was done. At that point, I was like, I'm meeting all these amazing people. And that's when I actually realized there's a really big gap in the market. The everyday Kenyan cannot invest in global markets. And I was just baffled as to why. It's something that's so easily accessible in the West. And there's a stat actually that says in the US, 70% of white households own stocks and only 3% of African American households own stocks. Right? The global market.
Right.
In Kenya, it was like pretty much zero.
Yeah.
Not zero. I mean, 0.1% probably.
Yeah.
But very small. But the thing again, I was tasked with this big mountain of how do I get started? And for me, I'm a little bit lazy in that sense. I feel that the reason we work hard, the reason we build networks is to leverage them. So I have a friend, as an example, who's a psychiatrist, she's a therapist psychiatrist, and I'm raising 2 children. If I don't know the answer of how to deal with something, instead of Googling, I send her a voice note because I'm busy, and then she gives me a response. And I trust her opinion, so I know I can rely on it. Same way I said, right, how do I build a business? I don't know how to build a business. I just know finance. And I just Googled a bit and I said, there's accelerator programs in Kenya. So I decided to join Antler. So I applied online. Antler is a VC incubator that takes on really smart people, puts them in a room and say, solve a problem.
Yeah.
You don't need an idea. You just need to have domain expertise, which I talked about earlier, years of experience in a particular field. So you are a subject matter expert. And it was crazy because the program was starting in September and I applied in like the second week of August. And so quick interview and perfect, got onto the program. Again, I don't know how to build a business, and they teach you from reverse engineering how to build a business. But I realized if I'm building a tech business, I don't have the tech expertise. And I also don't know the local regulations.
Yeah.
Which is a big deal because in our business, you have to be regulated.
Right, of course.
And so what did I do? I found 2 co-founders, one who's brilliant at tech, one who's great at regulation. I said, right, let's do this together. And I think that's probably the biggest learning about a business is that you look at, again, what are you good at and what aren't you? And then you hire for it. So fast forward, we pitch. So what happens is you pitch at Antler, and if the investment committee likes your product, they'll give you money. And they take a part of your company. So let's assume we're 3 co-founders, we own 100% of the company. Yeah. But if Antler gave me money, they would have taken 20% of the company at that time. We didn't get funding.
So you pitched the idea.
Dragon's Den style, pitched the idea. Right. And they were like, no, we don't want to invest in you. And I said, why? Why don't you want to invest? I don't think you can get regulation. I said, okay, great. That's your opinion, fine. And we didn't get the money. But after the program, our 3 co-founders said no. My co-founder locally was like, I can get us the regulation. We asked a few lawyers and they're like, we're going to charge you $15,000 to do the application. My co-founder was like, no, I'm going to do it for free. And he sat there and he wrote pages and pages of application.
Right.
And he was like, your job is just to raise money.
Yeah.
So what I did, obviously, I was again lazy. I said to my husband and my brother-in-law, who are fortunate enough to be able to do this, said, listen, guys, if anyone's going to take me seriously, I need you to commit, even if it's $2,000 each, $5,000 each, into my business so somebody can say, if the husband and the brother-in-law believe in her. Yeah. It's almost like human psyche, right? Yeah. They believe in her, I will believe, okay, let's give this.
Yeah. How much did it give you?
So they gave us, I actually got from 3 friends, I raised $15,000.
Okay. And your husband?
$5K.
Okay.
My brother-in-law $5K.
All right.
And he was just like, oh God. And then sometimes he still reminds me till today, I own you. As a joke, of course. Right. He's like, but I own your business. What's yours is yours, but it's mine. As a joke. And so we had to create a cap table. So you've sold this much of your company at this price because you have to put a value on your business. Right. And so this accelerator program teaches you, because I'd never done that before, how to put a value.
So even for the Antler, you're doing the pitch at the end of the
6-week program.
At the end of the 6 week program. Okay, so you have all the skills.
Correct. They like train you, they guide you, they teach you how to like go talk to customers, how to validate your idea, problem solve, etc. So we've got all these amazing skill sets, and they help you create a deck as well. Because I've never done that before. Don't get me wrong. I've been to clients and say, hey, listen, invest in BlackRock fund, but BlackRock has this big name it comes with. I don't have a name. Ndovu did not have a name. So it's a very different, it was for the first time, like, wow. And I would say it took us 3 months to raise $50K. So our first round was $50,000.
$50,000.
That's it. And the idea was that we needed to get licensing, build an app, and do a bit of marketing to start showing that we're generating revenue.
Yeah.
And boy, it has been hard. It's a hard road. Yeah. But totally worth it, and I would never change it for the world.
So how much because you said that the quote you were getting from the lawyers to do the regulation applications was $15,000. So how much did you need to pay in terms of the licensing fee itself?
I think it was like 50,000 shillings from memory.
Yeah.
Probably changed a bit, but 50,000 shillings.
Okay.
To just be able to apply. And luckily my co-founder knew how to do everything.
Yeah.
So we got our license in 50,000 shillings.
And how did each of you then decide what your percentages were for the company?
Good question. So actually when I was pitching this business, I wasn't with the same team at that time.
Okay.
And then, but they were part of my cohort. So they were part of my class, technically, but they weren't, weirdly, that you speed date in the first session.
Right.
And they give you a problem so you can see how you work well together. Mm-hmm. And actually, 3 of us were in the same first session, and it was so easy. It was like, yeah, cool. Yeah, all right. So anyways, how are you? Where do you come from? What do you do? What's your background? And we finished everything, and like, it was easy. Right? We understand it's not final, but let's just do it this way. I don't know why we like dated other people to like co-founder with.
Right.
But in the end, so them two were on a different team. Mm-hmm. I was on one team, and then their idea didn't go through. Either. So then I realized actually there's a weakness in my team. 2 of us were doing a very similar role, and that's not good for a business. You need to be in partnership with people who bring different skill sets to the table. If it's overlapping, then you actually have more conflict than it's worth. Yeah. So actually that's what happened. So we split. The other person went on to also do a similar business, and I haven't really kept in touch, but and then I brought these 2 on. So the way we did the allocation was because I had launched the idea, I got a bit more, and then we split it accordingly after.
Okay. And so did you and the other cohort, the other 2 guys, have to release each other in terms of IP based on what you had developed, or is what you're doing now completely different from?
No, so the other partner I had, we just wrote an agreement to say everything we've done today belongs to each other.
Okay.
And if you want to continue pursuing this, you can.
Right.
He actually took on the name because the company was called something else, and I said, yeah, fair enough. We just split the cost because there were some things that we paid for. We split it equally, and it was amicable because the reality was, It was like, actually, we are too similar to be doing the same role.
Yeah.
You know how sometimes companies have co-CEOs?
Yeah.
I always question how that works because you're doing the same role. So
and you laugh at you guys have co-CEOs.
Yeah. Yeah. Like, I really question, who's responsible of what?
Yeah.
And how do you define the roles and responsibilities? Whereas now the CDO is all tech. So if they mess up, I rain on them saying, hey, what are you up to? And there's an accountable person.
Yeah.
COO, which is Ro, who does regulation and operations. If they've messed up, I'm like, hello, what's going on?
Yeah.
And then if there's things like sales, strategy, fundraising, partnerships, if that messes up, it's on me.
Yeah.
So it's very clear. But like when there's co-CEOs, I do wonder, I'm like, how do you split that? Because there's overlap.
Yeah.
Yeah.
Okay. So in a Kenyan context, right, if I am looking to put money anywhere, right, and I'm talking about the different options I believe I have. I'd have the incumbents, the CICs, the old mutuals, the Sanlams, which would probably offer like the money market funds and bonds and things like that. And then I have the SACCOs, right? I have SACCOs as an option where I can put money, and I believe the biggest benefit that people get from that is that you're able to borrow against money for very little interest rates, right? And then there's the stock market, of course. Sorry, NSE. So there's that option that I have.
There's Ndovu.
Then now my question is going to be, okay, so if you have Ndovu here, what's the benefit of putting money into there as opposed to any of these other platforms or any of these other options?
Yeah, so actually the idea of the way I see it is that when you're building your investment portfolio, it has to be balanced. Life in moderation, investing in balance, you have to make sure you're doing the right thing. And the beautiful thing is that in your portfolio, you can have access to all of these things. It's just how you break down the percentages that matter.
Yeah.
Okay, so I actually think in Kenya, holding fixed deposits, treasury bonds, government bonds, and money market funds make absolute sense because the return you're earning or interest rate that you're earning is quite high. So for example, our last infrastructure bond was at 19 or 21%, 19%, and you're getting 19% tax-free because infrastructure bonds are tax-free. That has a really good place in your portfolio, but I wouldn't put all my wealth into the bond because now you're relying on the government to make sure they're going to pay back your money over a long period of time, but there's a place for it. And same with money market funds. Like you're telling there's low risk, safe funds where you're saying, I'm going to give you 100,000 shillings and you're going to give me 10 to 14%. Depends every year what they invest in, but that's great. But the problem about us being in Kenya is all of us are global citizens. So yes, when we don't have a US passport, but a lot of us consume products that come from abroad. And unfortunately, our exchange rate fluctuates from time to time. Actually, Kenya is probably one of the more stable countries in Africa that has a stable currency, but it wasn't like that last year. But on general, if you look at the Naira, the Ghanaian pound, is it pound or Egyptian pound? Sorry, Ghanaian cedi. Yep, the Ghanaian cedi. That has seriously lost value over a period of time when compared to Kenya. I was actually putting together a deck in our currency over the last 5 years. So now last year, obviously we had a lot of volatility.
Right.
But like year to date, last 5 years, we've lost 18% of our value. Right. So why is this important? It's important because given we are global citizens, I can see you've got a MacBook, you've got an iPhone.
I don't have an iPhone. I have a Samsung.
Okay. So
I will.
But Samsung is still international, right?
Yeah.
So we're consuming things that we have to pay for in dollars. And how do you buy it? They bring it on USD and then they convert it and you pay the same.
Yeah.
So my advice to anybody Kenyan is that I was at BlackRock. You can never call currency. And you can definitely not call currency in Kenya or African countries because we have political intervention, which just doesn't make sense. My advice to you would be you have an investment portfolio of, let's say, 500,000 shillings. 50% of that should be in Kenya shillings and 50% should be in USD. And that 50% that's in Kenya shillings should be, in my opinion, in infrastructure bonds, money market funds, a fixed deposit, and or some local property. But it has to be the right property because it has to generate enough income. So the reason why property is complicated, you don't want to buy land. It's illiquid. So let's say you had an emergency and you wanted to sell and all your money is land. The person who is in hospital is probably going to pass away because you can't liquidate, right? And so it's about being smart. It's not that it's a bad option, but I'd rather if you're going to buy real estate, it's an apartment where someone's renting it and they're paying you income. Again, there's a catch-22 because mortgage rates are so high. So you have to do the maths and say, okay, if I have this apartment that I buy for 300,000 shillings, not that you can get an apartment for that much in this area, but as an example, and I'm putting in 100,000 as a down payment and I'm borrowing 200, is the rent that I'm getting back enough to cover the expenses of maintaining the property, covering my loan, and then generating some profit? And if the answer is no, it's a bad investment.
Is it possible to have for that to actually exist? Is it possible to find? And the reason why I'm asking that is, interestingly, I had saved this question for today. I got this from on Twitter. His handle is Gishugi Kahome. And I guess over the last 2 days, he's been debating or going through literature on mortgages and home ownership versus renting. And so he put up this post. Yeah. It looks like a Facebook post by someone called Martin Tyro, right? Okay. And so he says, say I want to buy a house at Nyayo Estate in Embakasi going for 7 million shillings. Yeah. They ask me to raise 20%, which is 1.4 million. Correct. And they advance me financing of 5.6 million at the rate of 12% payable over 20 years. I shall be forking out 61,660 shillings per month for 240 months. Yet the highest amount I can of rent I can raise from the leasing the house is 35,000 shillings. If this was a business venture, it'll keep sucking me dry, as I need to raise an excess 26,660 over and above what I will earn as a maximum rent to service the loan stroke mortgage. Mm-hmm. This essentially is what we call investment me too. If you buy that house to live in it, you will effectively be paying double the rent all your life. And it doesn't make sense even if you have the cash at hand. If I had 7 million today and I invested it in my bank 7-year bond, which will earn an annual interest of 13%, I'll be taking home a cool 910,000 per annum, and that's 76,000 shillings per month, enough to rent me a 3 or 4 bedroom apartment in Lavington or Kileleshwa. So he says, Fanya Hesabu, with 7 million shillings, you can either live in Embakasi, Kileleshwa, or Lavington. Yeah. The choice is yours.
So the question goes down to, what is your financial goal?
Yeah.
Some people don't want to rent for the rest of their life. They don't want to, let's say that you lost your job.
Yeah.
But in this one, it's an investment, right? Yeah. But like investments do go wrong, even if they're they're low risk. Yeah. You know, we've seen banks go under.
Yeah.
So it just comes down to, what is your financial objective?
Yeah.
And can I be honest with you? If I've looked at properties around Kenya to just as an investment, and it doesn't make sense to me if I'm borrowing from a bank.
Yeah.
Because unfortunately, they're very small opportunities that you'll find where the rental income will cover the cost of maintaining the property, the mortgage, and generate you a profit. And that's just a difficult situation. But it can start making sense if you are from a chama, you've pooled your money together, you do get a loan, but you're taking a lower loan. So the interest that you're paying, that math that he did there, is less, so you're not paying.
So if he's getting this loan from a SACCO as opposed to from a bank, then it can make sense.
Then it can make sense. And this is why I think having investments in a SACCO in Kenya makes sense. Because actually being able to borrow against that makes a lot of, because it's a much lower interest rate than a bank. So I pro SACCOs, especially as part of your portfolio. It's good to have some savings with a SACCO.
Yeah.
Now, like I was saying, so if I was you, I'd have 50% in Kenya shilling. Right. So fixed deposits, real estate eventually. So you want to be a homeowner, right?
Yeah.
But then you're not buying it to make money. You're buying it because it's your home. And so your mindset changes, and you don't mind paying that additional 60,000 extra than you would have for renting.
But isn't that just philosophical? I mean, if I'm to use logically what this guy is saying, I'm paying double the rent to feel good.
Yes. But feel good is, everyone's values are, or everyone's anxieties are linked to different things.
Yeah.
You could come from a household where you were young and you got kicked out of your house and you had nowhere to live. So that value of paying more, it's all emotional. Investing is emotional.
Yeah.
You would say, I'm never going to rent and I'm going to buy my place, right? Yeah. And the value, that security that gives you, you can't place a value on it. Right? So investing is emotional, and it's very important to be very clear on what are you investing for.
Yeah.
And when you're deciding what you're investing for, there's an aspect of being very logical. And then the emotional part kicks in of, I want to hand over a property. So Kenyans are very proud. Everyone wants to buy land.
Yeah.
It's like, okay, buy land, but buy real estate, not an actual parcel of land. But Kenyans have this big philosophy of buying land.
Yeah.
And I think Ndovu comes in very nicely, is because we help you save and grow towards buying your real estate property.
Yeah.
Rather than saying, go get a loan. You know what I mean? So instead of paying that, borrowing that loan, why don't you take 3 years out and invest that money so you can get to a much higher value? So if you are taking a loan, it's on 20%, not the 80% originally.
Yeah.
So going back to how I build my portfolio, definitely the low risk assets in Kenya generate very good return. And I would put a proportion of my investment portfolio in that. So 50% of it roughly. And then, because even though we don't see significant currency movements like Nigeria, Ghana, Egypt, over a 5-year period, we still have lost 18% of our value.
Yeah.
And imagine like a local treasury bond now is giving you 18%, right?
So you're basically
flat.
Yeah.
So this is why I always say that actually do 50% in USD. And my biggest philosophy, if you're a Gen Z or someone young, just invest in a passive fund.
Yeah.
Yes, you can do fractional shares. You can go buy Apple, Tesla, Microsoft. But if you're that kind of person who doesn't have the time to be on your phone daily, checking your numbers, etc., just buy an index. And if you look at Ndovu, actually, some of the indices we've hand-selected, our investment committee, my years of experience, and said, okay, what do we think is going to generate future value? Because you don't want to buy something that's already valued, right? It's done really well. You don't want to go buy Tesla. What do you think? How much more do you think Tesla can grow? Right. So you want to buy a bit of the underdog.
Yeah.
And so I'll just take like the microchip fund, which is a semiconductor fund. And the reason I pick it is because it's quite topical as well. Everyone's talking about NVIDIA. It's in the papers, etc. But we put that fund on our platform a year and a half ago.
Mm-hmm.
I put in a whole bunch of money in it. And the logic was very simple. Where are we going to be in 10 to 15 years' time? Okay, so even for you, I think investing can be so simple, but we just overcomplicate it. We get scared. We're like, we've never done this before.
Yeah.
But you just need to ask the following series of questions. So firstly is that, where do we think the world as an economic engine is going? What is going to be there? Technology, 100%. All of us in this room can say technology is going to be there.
Definitely.
So I can't tell you what technology companies will be around. Do we think Google will be around? Do we think Meta will be around? We don't know. 15 years is a long time.
Yeah.
But I do believe the technology sector will be around.
Yeah.
So now I'm making an informed decision about something that I'm not too deep in and saying, okay, so if I think tech is going to be around, what technology funds will be around? So going back to the semiconductor fund, we just did this analysis and we sat down and said, okay, where's the world going? It's going to become smart. Like everything is smart. Your laptops, your fridges, your computers, your smart
Everything's
cars.
Talking to you.
Everything's talking to
summarizing your messages, your emails.
Everything's becoming smart. So we were like, right, what is the raw material that goes into building all these amazing things? And it's semiconductors, which basically is a chip that gets programmed, whether it's with AI, anything, and let's invest in that. And so last year, that particular fund generated 72% in return on the dollar. So add another 18%, that's 100% return. If last year, January 1st, you put in $2,000, 200,000 shillings, I'm just going to do a direct conversion, you would now have 400,000 shillings. And there's no way you would have earned that in a property. You wouldn't earn it in Kenya shillings because last year we saw so much currency devaluation. It was 20% devaluation. Just an example, like that's what the semiconductor... Now, keeping in mind, like we've seen quite a bit of growth in semiconductor because of NVIDIA, AI and everything.
Yeah.
Somebody would ask me, is now a right time to come in? So I'm a big believer of not timing the market. It's actually about the time spent in the market, right? So there's different types of strategies. If I was individually picking stocks, that's when you time the market.
Right.
But I wouldn't recommend that to anybody who's not in finance. You don't have the time, you don't have the skill set, you're gambling.
Yeah.
So I know NVIDIA's at the top. I know our semiconductor fund has done really well. But if you're in it for 2 to 3 to 5 years, it's still something you should hold.
Yeah.
Because why? We know that technology is going to continue using this raw material. It's basically the Apple of like 2000. I wish I bought Apple in 2000, right? When we saw the new phones come out, the iPad, the innovation of the iPod, and you could see how everything was now becoming online and digital.
Yeah.
That's what this raw material is, sort of semiconductors, and it'll continue to be there even maybe 20, 30 years.
Yeah. I mean, I think interestingly, what you talked about with the semiconductors is, we had the former NSE CEO seated right here, and he talked about how he made, was it like 3-fold or 4 times of investment when, the late President Mwai Kibaki came into power, and he saw that they were going to have an ICT surge. So he went and invested in the guys who were going to lay the cables, and they made like 4 or 5 times their money. So it sort of, sounds like the same strategy and thinking around the semiconductors. That's really interesting.
But the difference is, with this, you can get started with 7,500 shillings. Yeah. Whereas he had to probably invest millions. He had the luxury of having that capital.
So you're saying I would have put 7,500 shillings out, then I've gotten
15,
70 whatever percent on that.
On that. Yeah.
Okay.
So what I'm saying is that what Ndovu did was make global investing accessible.
Yeah.
right? And this is a big myth, like typically, even when I started off my career, I was like, oh no, I need to have at least like £5,000 to get started.
Yeah.
Oh no, like how am I going to do this? Like saving £5,000 feels like a lot.
Yeah.
But actually, I went online and I realized I can just put £20, £50 in, and I got started. And there's this magical thing no one talks about, which is compounding interest.
Yeah.
And all that means is that the money that you earn grows, and then that interest also grows, and that interest also grows. And before you know it, if you had a goal of getting to 1 million shillings in your bank account, in order for you to save at a 4% slowly, you would have to put in a lot more versus just if you invested it.
Yeah.
And so going back to building your portfolio, I would recommend, being young, whether it's you've got 100,000 shilling portfolio, 50% should be in USD, ETFs, where it's a technology fund. It has Apple, Microsoft, Tesla in the works. It generated 52% return last year. Look, that is a really high return. I think any fund that gives you anywhere from 15 to 20% on the dollar is an excellent fund. But do it, because guess what? You're not earning that in Kenya. You're just not. There's physically I haven't seen anything. Please, if you've seen something, please DM me. Yeah. Because I'd love to see. But this is like you're being part of human progress. And that's what the stock market is.
So at Ndovu, right? If I'm buying in at the 7,500, so the first thing you do is convert my money into USD.
Correct.
Okay, and then invest. And at what rate do you convert?
So great question. Yeah. We're very transparent. We get the rate from the bank, and then we put a spread on it because that's how we make money.
Okay.
And we also, when you're investing, we have an AMC, so annual management charge,
right?
Which is typical. Like any CIS fund has a 2% charge, 3% charge. Mansa X charges you 5%. We start at anywhere from, it depends on the tier that you're on, but anywhere from 3.5 to 4.5.
Okay.
Yeah.
If things are to go sideways,
yes,
because you've been, it's 2 years, right? Of course you have all the experience that you've come with from Deloitte, from BlackRock. But I'm wondering, what would need to happen for things to go left?
Yeah.
And you lose all, assume I come and put, my 50% of my USD investment into you, assuming you lose all my money. What would have gone wrong?
Yeah.
Yeah.
So actually, look, honestly, in this market, it's unpredictable. So you just have to trust the fact that you've, as a founder, put in the right governances, the processes, the protocols. Now, a couple of things as an investor. So say you came onto Ndovu and invested. Whenever you're picking any investment partner, it doesn't matter who they are. The main question you need to ask them is, where do you hold my money?
Yeah.
So I give you 50,000 shillings. You tell me you convert it from 50,000 to dollars, and then you buy the actual fund. Where does that sit? ?
Yeah.
And the key thing that a lot of people don't know is that when you're regulated by law, the Ndovu operational money where I go and pay my guys' salary is segregated from the assets that we hold. So that is segregated at a custodian. Mm-hmm. So right now, if you were to invest with us, your share of your S&P 500 or the semiconductor fund, microchips, is actually sitting under your name in a custody bank.
Okay.
I can't go in and say, hey, custody guy, can we sell this? No.
Yeah.
It's done based on instructions.
Okay.
So if something happened to Ndovu, you could get in touch with the local regulator and our custodian. Then we're regulated by the FCA, FINRA, and SEC in the States, who will say, we have all these, so they won't have your name, but the local regulator has all your details.
Yeah.
And they would say, hey, so we have this company went under, what do we do with these assets? Because actually they don't like unclaimed assets because it's a burden on them.
Right.
So the custodian will say, what do we do with this? So they'll call you, they'll say, hey, listen, you were with Ndovu went under. Do you want to sell this asset or do you want to move it to another broker? Because we're essentially a broker.
Okay. And so from what you've explained, you don't make your salary from the money that I put into that I invest into Ndovu. So for you, you're not making money off of your company makes money off of the different trades and all of that, but you don't necessarily make money from the money that I am putting in.
Yeah, so we don't earn anything in additional. Yeah. It is all yours. All returns go to you. So you'll see other local asset managers, they'll make money off your money and not give it to you. Mm-hmm. And banks typically do that. You put money in the bank account. Yeah. They're blending it. They're leveraging it. But you never get that. They give you like 2% every annual.
Yeah.
So we don't actually make money. So whatever you earn, So like if the fund returns 72%, we wouldn't say we're taking 20%, we give you 50, nothing like that. What you earn is what you earn, but we do charge fees, which I mentioned earlier. And also our operational functionality of our business is separate to the investment. So what I mean by that is like I have overheads, so paying for our office space, etc. We pay that through the revenue we make or the money that we've raised.
Okay. So are you profitable then?
So we are going to be very profitable. Very excited. I'm waiting for literally August numbers, and we should be profitable. So this means I can keep the lights on. I don't have to raise another dollar to grow. I'm very proud of that. It's taken us 2 years and a bit. It's been a hard journey, but that means we've found product market fit, which means our product is solving a problem in this market. And I am actually weirdly coming out to fundraise because we've just got our license in January, we got our license in Rwanda.
Okay.
And we're on track to get our license in Uganda. But to grow and expand, you need money.
Right.
And the way traditional businesses did it was they'd go to the bank, get a loan, and pay a high interest. Instead, on this side, I can also do debt, but I'm doing equity raising, which means I say, okay, this is the value of my company. I want to raise this much money. Please, can you invest in my business? So then I'm not borrowing money from them. I'm taking equity. So they're taking equity in my business. And so when I plan to sell or exit or IPO, they own 20% of my business and they get the value at that time. So that's a very simple way to explain it.
Okay. I had another question on, I guess, the way that your structure of your company works vis-a-vis you making money. Where do you make your most money then? Because the discussion that we had before, you're talking about how you had to sort of segment your potential market and work with a more middle class market, so to speak, right? Are there enough of those people in Kenya to be able to? I know you said your business is profitable. How much more profitable can it be based on the market numbers?
Okay, so I'll take it a step back. I think it's a very beautiful question you've asked. And so we are venture backed, which is VC backed. So you probably hear in the newspaper, all these big companies raise funding. And the idea is that you as a business have to grow your revenues to $100 million. This is the US metric. In order for you to become a unicorn, you have to be generating $100 million a year in revenue. But if you look at the population and the GDP per capita in the US, it's a very different ballgame to Kenya. The GDP per capita in dollar terms in Kenya is $1,200. So 52 million people on average, they contribute to about $1,200 of monetary value.
Right.
When you look at that in the US, forget the US is in a whole nother level. But if you look at that in Europe, the average GDP per capita is $50,000. So you can already see, yes, they have more people, but the GDP and the spending power
is just a lot higher.
So much higher. And the way we raise money, and this is why investing in Africa from a venture capital perspective needs to be very patient, because in the stats globally benchmark is that if you're in the US, within 7 years, you can achieve unicorn status. Okay? But in Kenya, and you have to remember, the US has 52 states. They all have the same language.
Right.
The culture is very similar. Yes, there's some small nuances. Regulations can be imported from one state to another. It's a much easier playing field. But in Kenya, like I just mentioned, I got my license in Rwanda. I had to get a separate license. We're in final stages of Uganda. We have to get a separate license. I want to move into Francophone Africa. I have to apply for another license. And you move into Francophone Africa. The language is different. The cultures are different. The nuances are different. The infrastructure is not there for us to trade in and move money in and out. So the question of going back to, like we mentioned, when I told you offline was, is there enough people? I'm still answering that question. Because from a venture-backed metrics, where they're expecting me to reach $100 million in revenue in 7 years, it's not going to happen. We don't have the GDP per capita. We definitely have the same amount. We have a good proportion of people. But are you going to acquire every single person? No. Right? So that's why for us, the strategy is we need to expand into other countries. That have similar type of cultures, nuances, where we can also help solve and create wealth for them. And we need to do it quickly.
I mean, how do you ensure then that you don't fall into the same trap as a few others who have gone before you in other industries nonetheless, right? But people who have found it difficult to either make their distribution models work or, and they come with like really great innovative, that ideas that seem really great and innovative. Yeah. And it's like, okay, the quickest way to do this thing is to expand. And so you expand and then you get it like, okay, maybe the expansion isn't quite working fast enough. So, and I'm wondering, for a lot of these other sort of startups or whatever the case is, their products were maybe not as emotional and as touchy. I mean, they if it goes under, I don't want to name any companies, but if they go under, it's like, okay, yeah, they were here, they're gone, like, cool. But for you guys who are dealing with people's money, if you guys fall into that I mean, given you have given the justification of, because of the way that you guys operate, we ensure that me as an investor, my asset is always somewhere.
Correct.
But like if you guys fall in that trap, that would be be fun.
Yeah, so like it's not fun, and there's big weight on your shoulders because also I'm quite a valued person, and I don't think I would be able to sleep if I lost someone's hard-earned money.
Yeah.
So my vision of success is that somebody taps me on the shoulder on the street saying, hey, because of you, my kid was able to go to Harvard. I could afford the fees because I invested.
Yeah.
But if we go under, I'm taking that away from someone. And for me, education is everything because I feel, education is this toolkit to help you come out of poverty.
Yeah.
And then it's up to you, right? Like yes, you might, the series of good luck and you might have bad luck, but eventually if you keep trying, you'll succeed.
Yeah.
But that's like a big burden.
Yeah.
And so, even the conversation of expanding into other countries scares me. I'm going to get into business with people I don't know and I don't trust.
Yeah.
But that's why from here, the importance of us getting licensed was really important because from the foundation, you're putting in processes that somebody who's just started would never do.
Yeah.
So we have AML, so anti-money laundering policies. As part of our budget, the money that we raise as fundraising, we put a portion of it to do penetration testing, which basically means we built this incredible platform, and then we got these guys from Israel and Eastern Europeans to actually try and break our system.
Yeah.
And we spent money making sure it's unpenetrable because we have lots of people's money on us, and it would be detrimental to us, to them, if we lost it. And so agreed with you, we have all the right things in place. And as long as I can comfortably say, okay, I did the best that I could on these aspects, and I really leverage what BlackRock did. So the reason BlackRock is where it is today is because the founder spent a lot of time focusing on risk. So he didn't do anything that was too high risk, where it would lose their customers' money. And when we were sitting down and saying, okay, what are the core values that we resonate with? Not just fluffy things that you see on people's website.
Right.
Genuinely, I asked my team to say, do we put the customer in the center of the decision?
Yeah.
And what would you do if this was your money? Because guess what? It's someone else's money.
Yeah.
And so even, for example, sending out an email, I'm like, do you think this is good standard?
Yeah.
Would you like to receive this email?
Yeah.
And they're like, no, not really. I said, okay, what would you like to hear? Like, put yourself in the shoe. And as long as we can say as a firm, as founders, we're drilling down to everybody saying, you need to do what's right for the customer. Because can I be honest with you?
Yeah.
If I do this is my thinking. If I do, and I went back to saying, if you do something passionately, money will come. I also believe I can move out of this VC-backed model very easily. I'm profitable now. I can say, listen, I don't want to grow. I don't want to grow at the speed that you want me to grow.
Yeah.
I'm going to take my time. I'm profitable, and I'm going to really figure out who my customer is. And I'm going to spend the next 6 months really focusing on getting it right before I raise more money and get that pressure of investors saying, why aren't you growing fast enough? That's when you make mistakes.
Yeah.
So actually internally as founders, I said, listen, we're profitable. We're going to come out to do a raise because we have a big deal coming out. We want to do enough marketing on that. And we also want to expand into 2 other countries, but we want to do it right. So I'll raise for that, but I'm not raising to keep the lights on.
Yeah.
It's a very different position. Now, talking about those companies who historically have failed in this market is because they were thrown money, and as a founder, you would take it, but then the pressure of growing makes you make bad decisions. And I know those founders, and I know they all had good intentions.
Yeah.
But they're growing in limelight. They have investor pressure from people who don't understand the African market.
Yeah.
They are forcing you to grow so fast that you make so many mistakes.
Yeah.
And sometimes as even a founder, if you're growing at that pace, you also outgrow the role. Maybe you're not the right person. You don't have time to reflect on that. And so again, going back to when we were having the offline conversation, talent is everything. And I need someone to say, actually, I wouldn't do it this way. I know you're the CEO, but I wouldn't do it this way. I'd do it like this.
Yeah.
And these are the reasons why. And we'd have a debate on it, and we'd make an informed decision at that point in time. But actually, it's really sad because when I saw those companies go down, as a founder, I know how much hard work, grit, you never switch off.
You know, I want to ask you a question on that. Sure. I know on time, like we've gone, but I have like four questions.
No, it's fine. I have
like 4 questions I need to ask, right? So this one that you're talking about, first of all, the founders, right? And of some of the companies that have gone down. Mm-hmm. I mean, you're saying, you know, there's dedication and there's hard, but at some point, if you're doing something and it's not working, you see, like you're saying you're profitable, right? Yeah. But if you're not profitable, but promising growth and promising whatever the case is, like at some point, I would hope that, because you're still making a salary off of whatever money you're raising, right? So at what point does it become selfish to continue to pursue this path when it's staring you in the face that this is not going to work? It's not working now. It's not going to work in Uganda. It's not going to work in Tanzania. Not going to work in Rwanda.
Yeah, you're not solving a problem.
Yeah, you're not solving a problem anymore. You're earning money. Yeah, you're earning a salary, and so it's extremely selfish.
It is very selfish, and I think it comes down to the type of person you are. So sometimes in your mind, as a founder, you've worked so hard, and you're like, failure is not an option.
Yeah.
But it's hitting you in the face that actually this isn't working.
Yeah.
And I think before. It just depends on the type of founder you are. Like we had honest conversations actually about 8-9 months ago. It was like, if we're not gonna crack this market and this isn't gonna work, let's give the money back. It was a hard 18 months. You know, when you're like, I'm doing all the right things, but there's no market pull.
Yeah.
As founders, we sat down and said, listen, this is how much we've got left. Why don't we give this money back? Okay, this investor money that we've raised, and we'll come back and do something else. But maybe it's not working.
Yeah.
But of course, with time, then you start seeing signals, and then, you know, the cookie starts to crumble in the right way, and it worked. But that just comes down to founder integrity. It's just who you are, how you're raised. Like, I'm quite proud of who I am, and I would never want anyone to say, so-and-so did this selfishly.
Yeah.
So I know there's been some instances here where there's been a lot of light on founders misusing investor funds, etc. But even in our founder agreements, we have some KPIs that say that if we achieve this, you get a bonus. And it's obviously decided by the board. And if you achieve Y, you get another bonus. And the reason we do that is because also we want to incentivize ourselves to make sure we're doing the best that we can to get where we can get as quickly as possible, but in a responsible way.
Yeah.
And this goes back to my ethos. Investing is responsible.
Yeah.
It's not like this gambling. Let's do crypto. It's not. You have to invest responsibly. And again, we hold ourselves accountable as a founding team that, hey, this isn't working.
Yeah.
It's the right thing. And they're tough conversations. You know, you've had a long day. You're sitting there. You're constantly thinking about your business. So to answer your question in short, that it comes down to the founder.
Yeah.
And I can't speak for everyone, but I do know the sweat and blood and tears that go into like some of the companies that went under.
Yeah.
It's tough, man. You don't want to see something you spent your whole life building go down. It's hard. But you do have an investor obligation to actually do the right thing.
Okay.
Like we mentioned earlier, I wouldn't take a stance politically because I don't want to be shut down for a wrong comment because I have a responsibility to my investors.
Okay.
So yeah.
Fair.
It's a tough one.
Yeah.
I'll give you that.
Okay. My next question is a little philosophical stroke. What's the word? It's a little out there. It's a little left field, right? If we were to look at your life, right, as a business, right, and so we say, your parents' investment into you started here in private school at Nairobi Academy, and then exported, as a product, exported into the UK.
Yeah.
Invest there as well.
Yeah.
You then you work in Deloitte, work at BlackRock for X years. Total time you spend in the UK is 18 years. Leave there when you're earning, a lot of money, right? But you've been able to invest in properties, invest in, I guess, things that will be able to give you passive income coming back. And then you move back to Kenya. And now you have fantastic experience to be able to build this platform that you've built now. my question is, I guess, twofold. One, with the kids that you have now, would you put them on the same path in terms of exporting them to enable them to be able to have the earning potential that you have had? And then secondly, my question is, if you hadn't been exported, do you think your earning potential would be, your ability to make money would have been inhibited or capped or have a lower glass ceiling, so to speak?
Yeah. So for the first one, 100%.
Yeah.
I'm going to treat my kids like we have no money.
Yeah.
Even though we do, because I feel with not having money comes a big level of maturity that, so not, obviously they're going to live in a nice house, they're going to have cars, but when they're like, Mommy, I want this, I'll be like, no, let's build the entrepreneurial spirit. And I've started teaching them about money now. So I take him, he's 2, I take him to the supermarket, I give him 500 shillings, and I'm like, you can buy whatever you like. Then he comes back, he's like, can I have this? I'm like, no, it's too expensive. We don't have enough money. He doesn't get it. But so those principles very early on. And yes, I will export my children. And the reason is the second question. If I hadn't received the exposure, so you could put 2 people exactly. I have friends. We're 2 different people, same upbringing-ish. Got sent to exported, as you mentioned, and then came back. But they're doing 2 different things. So either comes from you as well. But I will say 100%, if I hadn't had those difficult conversations at Deloitte, I didn't have to fight from like 1,000 people application to 2 jobs in that one department. If I didn't have to have those difficult conversations, I didn't learn how to, at BlackRock, they teach you how to be in a room, how to speak to investors, how to answer, how to listen out, read the business language. What people say sometimes isn't what they want. If I hadn't had all of that and I started a business in Kenya, I don't think I would be as successful or as aggressive as I would like to be today. So agreed, I will be sending my kids away at a decent age, 16, where they need to learn to be independent and they need to learn how to do a job where, even if it's like selling shoes on a floor, even though we come from, touch wood, we've worked really hard and we're really successful, but they need to learn that.
Yeah.
Because there is nothing like looking at someone and saying, I wish I had that. Right? I don't want to give my kid everything. No way. Yeah. So I would export him because the question is exposure. And I always say this when I'm hiring my team here as well. I have they're part of my family now, they're incredible Kenyans, but they lack the technical expertise because they just haven't been given the opportunity to be put in projects where they experience different challenges. Yeah. And so I can't hire really smart people that worked at Google because I don't have enough money. I'm profitable, but I don't have enough money. So we bring them as consultants, and I tell them, you need to work with them to pull out everything you could possibly can in the 3-month period they're working with us, because they have technical expertise you will never have in your life, unfortunately, because of exposure. Yeah. So,
Okay. Last question.
Sure.
Is there a shortcut to making money? I feel like a lot. I would love to have a shortcut to making money.
So would I.
Is there a shortcut to making lots of money?
So the question again goes to lots. Like, what do you mean by lots of money?
Lots of money means I don't have to work another day in my life. I can afford. I can have a house. I can have a couple of cars. I can have my kids ensure that the education's paid for, and I do not suffer. I live in Kenya, but I don't have to. If I got sick, I can afford my health insurance. And even if the disease exceeds whatever the health insurance requires, I can pay that. Yeah. That for me would be
Yeah. So the answer to that is there's no shortcut. Yeah. But it's making the right decisions financially. So let's take a standard individual. So let's say, I don't know what the average salary is, but let's say somebody who gets into a corporate job. Yeah. What you need to realize is that, I teach these in our webinars, actually. We do a lot of educational webinars, and it's that it's not, when you're spending 200 shillings on a coffee, like if you went to Java, it's not the fact that you're spending 200 shillings. It's the compounding effect of spending that 2,000 shillings versus what you've lost if you invested that 200 shillings. Mm-hmm. And the only way, and I wish I was taught this when I was younger, because I'd be a lot wealthier lady today, is that actually like I mentioned, I had fun in my 20s.
Yeah.
But if I had invested that, I would be in much better place, because the idea is that you need to work out backwards. Is how much money do I need to be able to generate on an annual basis through passive income, so I no longer have to worry about my health insurance price, sending my kids to school, etc.
Yeah.
And then you work backwards and you say, okay, by the time I'm 30, if you're starting off in your career, you're a graduate student, by the time I'm 30, I need to have, let's say, 50 million shillings. I know it sounds a lot, but it's not. 50 million shillings in investments, because not only are you earning from your income, you're also earning from your investments.
Right.
And we do this calculation and we go backwards and say, okay, that means today I need to be on a salary of 350 shillings a month and I need to save 100,000 shillings. We do this calculation for you. But you're not saving, you're investing. And you're investing responsibly. So I'm not going to tell you, go put 100,000 shillings in Apple. No, I'm going to say buy the tech index and just wait. And through that, then you say, okay, so if I'm spending 200 shillings on a coffee here, how do I change that habit? I'm going to try and invest that, and I'm going to make my coffee from home, which costs me 30 shillings, right? And I'm not saying don't enjoy all the joys of your life, like don't take out everything, but what brings you joy is going to be different to what brings me joy.
Yeah.
But some things you don't have to do. And one big thing is don't keep up appearances.
Yeah.
Dude, if you get that, because that's the, unfortunately, that's the generation. My 6-year-old niece knows what designers are.
Yeah.
It's like, sorry, what?
Yeah.
Why do you know? But they know, right? Because that's how quickly information moves. But don't keep up appearances. Don't buy houses you can't afford. Don't buy a car that doesn't bring you value. Pay yourself first. Get into that habit of saying, okay, I am a business. I, Radhika Bhachu, am a business. So at the end of every year, a month, I'm going to pay myself and I'm going to invest it. And then slowly and surely, once you figure out like where you're going, you are able to live that life. It'll take 10 years. There's no fast route. It'll take some sacrifices, like not going on holiday. Your friends are all going on holiday. You're like, okay, I'm going to limit myself to 2 holidays a year.
Yeah.
One with the family, like my siblings, etc., and one with my friends. And then you think of, okay, so if this is my current income, how else can I generate income? Is it I do a consulting gig? Do I start tuition, teaching kids? How much does that bring me? It's about looking at yourself as a business. If I put in 5 months, and then, so for example, I go get my beautification done from this guy, and I say to him, okay, now you've become profitable. He invests on Ndovu as well. Right. Now let's think about how you scale your business. Your work is kazi ya mkono, but how do you scale it? You train 3 guys, you keep them on commission, and there's enough. He's in Kilimani. You now need to open a branch in, let's say, Thigiri sides, because you can. But you are scaling your business through you. So, you do podcasts. What else can you do? Can you do training videos on how to hold a podcast? There's a digital economy.
Right.
You can create online, creative videos, etc. There's Wowzy, that if you're an influencer, even small, you can still get like brands to pay you for the work you do. The internet is your oyster. Why do we have to build a local Kenyan brand? Why can't you build something global, drop shipping? Why can't you take a product from here, list it on Amazon, and be able to sell it there? It's like finding ways to be scrappy.
Right.
But there is no get rich quick. And if there is a get rich quick, please tell me, because I'd love to be involved. But there isn't. It's about being mindful and respecting every shilling.
Yeah.
It's really bizarre, but honestly, even if you're collecting, let's say that 200 coffee, you're going to go out with your friends on Friday night. You decided this Friday night, I'm not going to go and drink because it's going to cost me 5,000 shillings. Let me invest that 5,000 shillings. Let's say you put it in microchip. That same 5,000 shillings would have been 10,000 shillings. It doesn't sound a lot, but the minute you start aggregating the small things, like 5,200, you're being smart with your money. You can, just being smart with your money, the small amounts. Like instead of eating out, first of all, it's bad for your body anyways. Why don't you go to the gym and work out? You'll feel good. You look great. Guess what? If you have a good body, you don't need expensive clothes because whatever you wear is going to look incredible. Yeah. Right? Like, that's one advice my dad gave me, actually. He was like, he's like, you don't need expensive things. You just need to look good. You need to work out, eat clean. Yeah. If I'm wearing a t-shirt and jeans, you're going to look great. You know what I mean? So it's like being mindful. Meditating weirdly gives you a lot of clarity. I know this is like so off track, but meditating gives you so much clarity to see where do I need to be in my life, but you need a plan. So if I was in my 20s coming out of university, I'd say, okay, which uncle or auntie do I aspire to be like? Go speak to them. Ask them how they did it. Come back and say, okay, can I do it better than them? and then work that way to like figure out. I honestly, I'm a founder. I am building a company, but I have mentors. I have an army of people helping me behind the scenes who are not employed by me.
Yeah.
I have a circle of friends, because it's a very lonely journey, who are doing the same thing, and we share candidly, hey, this is the challenge, what would you do? Like I mentioned, raising children is one of my biggest challenges now, and I have a friend who I'm like, hey, listen, they're going through this, what do I do? And she's able to help me. It's those people building the right network. And guess what, guys? Being in the right room can change. There's a podcast from will.i.am. I can't remember the name of it, but just Google will.i.am, and I think it was with Stephen Bartlett. Everyone listens to Stephen Bartlett.
Diary of a CEO, yeah.
But Diary of a CEO, exactly. And the one thing he said in there, because when I'm working out and I always listen to something, and he said that if I was able, the way I am so successful was I was in the room at the right time. And that means broadening your network. Like, for example, Collins is sitting here. He doesn't have to be here, but he wants to listen in, right? He wants to learn what's going on. How do people think about different things? That's what it is. And there's no quick, easy way. You know, all of those people who say, oh, yeah, so-and-so got rich. Actually, they've been working behind the scenes and they've not told you. But a lot of blood, sweat, and tears went into that.
Yeah.
And the other thing is, once you make the money. So making money is easy, guys. Making money is easy. But keeping it is the knowledge we don't have.
Yeah.
So, for example, we were talking about another friend of ours who actually, unfortunately, father passed away, but they came into a big life insurance policy. He went and bought 3 cars. Totally random, like whatever. That is not how you grow money. Rich people don't spend money, guys. If it's a liability, they don't want to spend it. They think twice. Whereas the middle class, unfortunately, we're not taught that actually when you make money, you have to invest it and then you spend the interest.
Yeah. Not
your actual hard-earned money. And that's why I think, like, that's my one mission. Some of my investors say, oh, well, you have to pay the school fees. You have to educate everybody first before you can be profitable. And I'm like, yeah, but this is how you build. So I'm building a VC-backed company, but recently I'm saying, actually, I'm going to take my time because I don't want to fail, number one. And also, if I took my time, I can, we can build something. Yeah. Yeah. So, yeah.
Okay.
Cool. I hope that was insightful.
Yeah. It's been like an hour something. We'll have to edit this down. Yeah. But that was really good. Learned a little bit more about Ndovu, which I did not know. And your history as well, and your background, and why you have the credibility to have built Ndovu, which is impressive. I think achieving profitability in 2 years is something.
Yeah, I mean,
if your August numbers are good, and
they are good. So my team is, honestly, I'm so happy with the team I have now. Yeah. So
that's great. Anyway, guys, this has been another fantastic episode of Financially Incorrect. Please tell us who you wanna see next. Please like and subscribe. We are back now. And we'll, I guess, keep discussing. We're trying to have Julian's Mboko on here, so we can have a proper discussion around everything that's happening in the finance space. So I think either within the next 2 or 3 episodes, he's going to be here, and we'll have a very candid chat about the Kenyan financial state right now. But as usual, this has been Financially Incorrect, and we will see you guys on the next episode.